Hi everyone, I have many new medium time frame and low time frame Elliott wave scenarios, and I'm gonna run you through every one of those. So first of all, a medium time frame bullish scenario on the chart right now is that this is a WXY, which would then finish this green A, and then we're looking for a three-wave move to the upside to finish wave B, and then this is an expanded flat A, B, and then an impulsive C to the downside to finish wave 4 and eventually have more upside in a wave 5. The second bullish scenario is that this is a WXY, then maybe the end of X is over here, but more about that on the lower time frame counts. And then we would move down for wave Z, which then is the end of wave 4, and we can expect more upside to come. Now the green fibs that you see over here are ledger targets for a wave 4, and these green fibs are taken from the low of wave 2 all the way down there at 16.3k to the high of 3 at 25.3k. The first medium time frame bearish scenario is that wave 5 is already in, well, basically the yellow C, and therefore the bigger B is in, where this was an ending diagonal, and we are now looking for much more downside. Locally, this is then a 1-2-1-2 before we can expect a very impulsive 3 to the downside. Eventually, this scenario would lead to taking the lows at 15.5k, which is basically the low on the chart that we had in the past couple of weeks. Locally, the invalidation is taking the high of this green 2 over here at 24.6k, because if this indeed is another 1-2, the blue count, then the retracement, this wave 2, is not allowed to go above the origin of this blue wave 1, which happens to be here at this green wave 2. So a 1-2-1-2 in this first bearish scenario on the medium time frame. The second, more bearish scenario, which eventually leads to more bullishness, but medium time frame bearish, is that this WXY is a bigger W. So then this is a W, then we are looking for an X over here, before then a Y to the downside, finishing wave 4 and going to the upside for wave 5. Locally, I would like the minimum target for wave X is usually the 0.786, because a WXY, each wave follows the other one up between the 786 Fibonacci and the 1.38 Fibonacci. Now in this case, the 786 should be pulled from the origin of W to the end of W. So from here to here, and then the 786 on your chart. Now in this case, this would result in some sort of a three-wave structure, the blue count over here, where this wave B can either be quite shallow before more upside, or we have an A, B, C, which then is an expanded flat in this bigger X wave before then moving down for Y. The medium time frame, or the third scenario of the medium time frame, is that we are in a WXY, which then here is the green W once more, but then the X is already finished. So instead of having like a three wave and having the X here at the 786, which is a target for wave X usually, we would get a unusual low X and then move further to the downside to create wave Y. Now, if this is a valid scenario, or if this scenario is going to happen, then a few targets over here are the white lines for wave Y, where the most common one is the 1-to-1 and the 1.236, which is taken from the high here of 3 to the low of W to then the high that we made today, which might then be the high of this wave X. And this would actually be some nice confluence with my yellow target box over here, which is quite a nice volume area as well. So yeah, this would be quite interesting. And also I should note that wave 4, if this then is the low of wave 4, we don't want to see higher time frame candles close below this 0.5 fib, because wave 4 tends to not go below the 0.5 Fibonacci, pulled from the low of the green 2 at 16.4k to the high of 3 at 25.3k. Now we go to the lower time frame scenario, where the first scenario, as you can see, is absolutely invalidated, and that is, I do want to show you, just in case you see other people online talking about this scenario, it just doesn't happen. Because if this is a wave 3, so we have a 1, 2, 3, 4, 5, this cannot be, guys, a wave 3, because this wave over here is shorter than wave 1 and shorter than wave 5. Therefore, following the Elliott wave rules, this is not an impulse because wave 3 is not allowed to be the shortest wave out of wave 1, 3, and 5. But I checked and wave 3 here is the shortest. So this scenario can go in the bin. This A, B, C, or a potential 1, 2, 3, 4, 5 can go away. So we click on gone. That also means that this more bearish scenario in this 1, 2, 1, 2, and then 3 to the downside is invalidated. Not necessarily the 1, 2, 1, 2. I'm sorry. The very bearish scenario is not invalidated. It's just like the ABC that I have over here is invalidated because I then had a 1, 2, 3, 4, 5 in the A, followed by a 3-wave B, and then another 5-wave move in C. But of course, again, if this wave 3 is shorter than 1 and 5, this cannot be an impulsive wave, which therefore means this cannot be an ABC zigzag. So that one also goes. So we have 2 low time frame scenarios left, and quite unfortunately, maybe those are both a little bit bearish. So the first scenario that I have, which has the invalidation up here at these highs at about 24.6K, is that this is a WXY and we already finished wave Y. This is absolutely possible. And if you look at the targets, then the 1-to-1 over here that you see, which is a very common for wave target for wave Y as well. This 1-to-1 trend-based fib extension is taken from the low over here to the high of W to then the low of X. In the W, we then have these 3 waves. Then we have 3 waves in X, an expanded flat, followed by a 3-wave structure, some sort of an ABC again in this wave Y, which would then be an expanded flat in Y as well, which actually leads to a very nice target area, hitting the 1-to-1 basically to the dollar with the wick. And also these fib levels, the 1.236 and the 1.38, are very common targets for a wave Y. So this is definitely a legit scenario. Of course, price might pump, but hey, we have our invalidation over here. The reason I have such a high invalidation is, well, just because the highest target for wave Y is the 1.236. And yeah, we didn't reach it yet, so price can move up, but if we really push up very quickly or impulsively, this scenario is invalidated. There's also another like more bullish scenario where if this is then an A or some sort, then we have a B, and this is maybe, or wait, like an A, B, C, or a WXY, that we could have a 3-wave structure over here. But at the moment, I don't have that count on my chart because for now, it seems very unlikely. And the last scenario I'd like to show you is another bearish scenario. But in this case, we have this green A over here finished at the moment. So we have a 3-wave structure in ABC or WXY, doesn't really matter too much on the low time frame, here in the A. Then we move to the downside to maybe create wave B. And you may have read it on my chart already, but over here, this box is very important. The low that we made a couple of days ago was made during the weekend. And usually the markets are not that kind to let retail traders get into their longs and go all the way to the upside without at least stopping them out at a certain moment before finding more upside. So it's actually quite attractive for the markets to take the volume below the lows over here, stop some people out, then move price to the upside. So in this case, I have a wave A, followed then by some sort of a 3-wave structure B, to then create an expanded flat and then a C for more upside, and a nice target would also be my target box over there. So this is a scenario that I do have in mind at the moment, which is also the last scenario that I wanted to show you in this video today. So thanks for watching this video. If you think this is valuable, please like, subscribe, and let me know in the comments what you think. Thanks for watching, and tomorrow at 7 a.m. in the morning, you'll have another Bitcoin update, including the higher time frame count. See you then. Bye-bye.